Welcome to episode 44 of More Time Financial Gen Y Advice. So in today's episode, I want to talk to you about the difference between good and bad debt. So I'm going to assume that everyone watching this would have some basic knowledge of what debts are: credit cards, personal loans, car loans, etc. So we're taught that all debts are bad, which in a lot of cases is true, but there is such thing as good debt, and it's really important that you understand what the difference between good and debt and bad debt are if you're wanting to be successful financially. So good debt can be something that has one or more of the following. So firstly, some or all of the repayments are tax deductible or tax friendly. So secondly, the value of the asset or that the debt is attached to increases in value over time. And finally, the asset, again, which the debt is attached to, earns you money or earns you an income. So to give you an example of what this type of debt would be, could be an investment loan or a mortgage on an investment property. So the interest repayments for that debt are usually tax deductible. The value of the house or the value of the investment property is hopefully going to increase in value over time. And if you're renting out this property, you're going to be earning, or it's going to be earning you an income from the rent that you receive. So another good example of what a good debt could be would be a margin loan or a loan to purchase a portfolio of shares. Again, it meets one or more of those following criteria. So, and finally, the final one, which a lot of people sometimes don't consider to be good debt, but really depends on how you're using it, is your student or HECS debt. So this is, of course, if you're using your qualifications that the debt is attached to in the workplace, ideally this is going to earn you more money than if you didn't have those qualifications, just depending on your personal circumstances. So do some research and find out the difference between good and bad debt, and hopefully this will help you make some decisions on your finances in the future.